everyone. Please let me know if my voice is audible to everyone. Okay, so we are going to start with our session in a couple of minutes time. And this session is also going to be available on YouTube in pre-recorded form. Okay, so today we are going to discuss one of the past paper questions of ACCA, and it is from June 2025 mock exam. Okay. Furthermore, those who are not still enrolled for the paid batch for the proper course, they will get some free access, some free material on our global WhatsApp groups. And I really hope that you all have all the details about the global WhatsApp groups as well. I hope that you all have the Google Drive link with you as well. Okay. Please let me know if my voice is audible, if the screen is clearly visible, yes or no. Okay, great. Now, many of you are already enrolled for the paid batch, and there might be some students who are not enrolled yet. So, this session is actually for everyone. And right after the session, I will be active on my WhatsApp group to share some free resources and some guidance. Okay. I am writing my WhatsApp number over here. That is +971 5850 8907 8907. Okay, +971 5850 8907. So after the session, you can obviously contact me. You can WhatsApp me. Just leave a WhatsApp message and I will get connected to you. If you are not enrolled yet, still make sure that you are added in our public WhatsApp groups. Okay, there are some public WhatsApp groups where we share free content. There are some groups where I share free useful study material which you can use. So for that, I am sharing these two numbers. Now, if you want the public WhatsApp group links, you can connect with our support staff. The process is very simple. Visit our website, that is VIFHE.com. On the website, you will find contact us. And there will be a WhatsApp number for the support staff. Ask them to add you to public WhatsApp group. Okay, so you can ask them to get added into the public WhatsApp group as well. In this session, I am going to solve a past paper question. Okay, let me write the number as well. It is 00971 5210 5210 90867 90867. Okay, 00971521090 867. So you can approach them as well. Okay. Now, those who are already enrolled, they have more than sufficient content available on the portal. They already have a lot of content, a lot of material available on the portal, and they have been guided about steps, step 1, 2, 3, 4, 5, 6, and 7. So if someone completes all the 7 steps, they will be very, very perfect in AFM and they don't need to be worried. I will today discuss this question number one because it has some aspects of linear programming in it as well. Okay. If you want to download, do you all have this PDF file with you? If you all want to download if you all want to download this question paper is specifically June 2025 ACCA official mock exam. If you all want to download this material, you can go to Google Drive. I provided a Google Drive link to everyone. If you don't have the Google Drive link, you have to talk to me. In the Google Drive, go to past papers and relevant material tab, and there you will find June 2025 mock exam tab. Okay. Over there, you will find some spreadsheet files, some PDF files, so you can download it from there. The purpose of today's session is to solve this question number one with you live. If I tell you the topics tested in question number one tested linear programming. It is tested very less frequently. You can say once in 10, 12 attempts. How many of you have done linear programming? Have you done linear programming area, yes or no? So this specific question tests linear programming. Okay. Now this is not tested regularly. Okay. Then if we talk about question number two is about mergers and acquisitions, and question number three is about interest rate swap. Now you have to, those who have completed all the 7 steps, you have to actually set an agenda for the day. I'm writing some topics over here. Number one, linear programming. Number two, tick size and tick value. Number three, BSOP calculator, Black-Scholes option pricing calculator. Okay. Number four, interest rate swap. And number five, currency swap. Okay. Linear programming, tick size, tick value, BSOP model, interest rate swap, currency swap. Also, dark pool trading system, Dutch auction, loan amortization schedule, SPACs. Okay. So you have to complete these things today. How many of you are not enrolled? Even if you are not enrolled, even if you are not part of the paid batch, even if you are not a fully enrolled student, you can still WhatsApp me. I will share some videos and material relevant to these topics. Okay. Now, out of these topics, three are very important. Number one, number two, number three. Interest rate swap, currency swap, and BSOP calculator. One of them will be most likely tested in your exam. So this is very important. But as far as linear programming, tick size, tick value is concerned, or you can say dark pool trading system or Dutch auction or SPACs is concerned or loan amortization schedule is concerned, they are not very frequent. If you don't have study material or videos relevant to these, you can WhatsApp me. Okay. If you don't have relevant material relevant to these, you can WhatsApp me and I will share the relevant material with you. Is this clear, everyone? Can I now proceed with the solution of the question? Okay. So I have also mentioned my number and I have also mentioned what you must at least do today. This must be done. Okay. Things that I stated linear programming, tick size, tick value, BSOP calculator, interest rate swap, currency swap, dark pool trading system, Dutch auction, linear loan amortization schedule, and specs. So please make sure that you have study material relevant to these and complete these today. Now, can I proceed with the session? Are you all fine? Shall we start? Shall we start discussing first question? For this question, we also have available Excel file, available spreadsheet file, all solutions are available. So even after the session, if you need assistance, if you need help, you can WhatsApp me. Okay, are we all clear? Are we all together? Shall we proceed? How many of you have actually already completed Cosmore company? Do we have students who have previously completed this question number one named Cosmore company? Yes or no? Have you completed it previously? Have you attempted it previously? Or no, you have not? Okay, so it means that it is a new question for everyone. Great. All right. If you want, you can go to Google Drive, go to past papers and relevant material tab, go to June 2025 mock exam tab and download the relevant PDF file and Excel file. You will find it very easily. Now let me start the question. This is question number one. It says Cosmore Company is a manufacturer of fruit flavored drinks. Cosmore Company is continually investing in product development. Cosmore Company's board is currently considering a major strategic development to invest for the first time in food manufacturing. The proposal is for Cosmore Company to start manufacturing ice creams. The investment in facilities to manufacture the ice creams would mean that funds to invest in other products will be limited for the next 5 years, next few years. So this specific paragraph highlights the fact that funds will be limited. Okay, limited funds are available. And whenever we have limited funds, it means that capital rationing is coming into place. Yes or no? Capital rationing is coming into place. Yes or no? The finance department is prepare estimates for the investment in facilities to manufacture ice creams. Finance director is particularly concerned about two elements: the cost of the initial investment in the facilities to manufacture ice creams, the selling price. The sales director has suggested that price should be increased regularly, but that a lower initial price may have to be set to establish Cosmore Company's ice creams in the market. So first concern is the amount of initial investment. And the second thing is that we set a lower selling price at the start and then we increase the selling price gradually. Some directors have queried how the assessment of the risks of the investment is reflected in the cost of capital and the operational cost figures in the investment appraisal, and Cosmo Company's finance director wants to respond to their concerns. The finance director also wishes to look at how Cosmo Company chooses between investments when there are constraints on the funds which can be spent. Important thing. Okay. Again, this fact highlights that there will be constraint on funds. Funds will be very limited. Funds will be limited. The project should be assessed using a 4 years time horizon. We are always provided with a relevant time horizon over which we do evaluation. Revenue and quantities of ice cream sold in the 4 years can be assumed to be as follows. Revenue for year number 1, 2, 3, and 4 is given, and quantity of ice cream sold is given as well. The price of each ice cream sold will be $5.20 in year number 1, rising by 5% each year in years 2 to 4. Okay. So now they have also given you the information about current selling price and how the selling price is going to increase. The cost can be assumed to be 3.80 per ice cream in year number 1. Cost in real terms can be assumed to fall at an annual rate of 4%. Now the interesting thing is that costs are not expected to rise, they are expected to fall. They are expected to fall. Fall means decrease. However, they will also be subject to the annual inflation rate, which is as follows. But then there will be inflation as well. Now, I hope that you know that there is something known as real terms and then nominal terms. Okay. Prices may increase due to inflation. This is one thing. But prices may also decrease due to the actual decrease in the value of that particular component. Ice creams will require forecast investment in manufacturing facilities of 16 million. Is this an inflow or an outflow? Is this an inflow or an outflow? The ice creams will require forecast investment in manufacturing facilities of 16 million. So 16 million is a outflow, correct. Tax allowable depreciation is available on the facilities at 25% per year on a straight line basis with a balancing allowance or charge available at the end of 4 years. Facilities can be assumed to be sold at the end of 4 years for 10% of the original investment. So when I will sell it, when I will sell this facility, what will I get? What are the proceeds? Proceeds will be 1.6 million, correct. Proceeds will be 1.6 million. So dollar 1.6 million will be my proceeds. Excellent, correct. Okay. Working capital required at the start of the first year will be 12% of the first year's revenue. So working capital is linked with revenue. You take 12% of revenue, you get the amount of working capital. For the second to fourth years, working capital can be assumed to increase by the annual rate of inflation. Working capital is expected to be fully recoverable at the end of the fourth year. Fully recoverable means that whatever working capital has been invested, it will be released. Cosmos Company currently has $75 million one shares in issue, with the current share price being 3.80. The market value of Cosmos Company's debt is 40 million and its pre-tax cost of debt is 9.2%. Holwell Company has been identified as an established ice cream manufacturing company with a business risk profile similar to Cosmos Company's new project. Holwell Company has 50 million 0.50 shares in issue, currently trading at $2.20. Holwell Company has an equity beta of 1.44. The market value of Holwell Company's debt is $30 million. Now, what is Holwell Company? What do we call Holwell Company and why Holwell Company's information is given? Can someone tell me why is Holwell Company's information given to us? Why is Holwell Companies? Yes, it is a company doing a business similar to the business that we will be doing. Excellent. And what do? We pick a similar company and we use its beta asset, correct? We will not use beta equity because beta equity will reflect its financial risk as well. However, since we are setting up an ice cream company, we need beta asset. What will we do? What will we do about beta equity? We will ungear it. We will ungear it using debt to equity ratios of Holwell Company. Using debt to equity ratios of Holwell Company, we will ungear beta equity. Always remember that beta equity is a component, is a number that reflects business and financial risk both. However, we don't need to have the financial risk, so we will ungear it. We will calculate beta asset of Holwell Company. Beta asset of Holwell Company will reflect its business risk, that is ice cream manufacturing, and that will be used for our capital asset pricing model calculation. So over here, they have also plugged in some workings relevant to your basic weighted average cost of capital and ungearing and gearing elements. Current risk-free rate is 4.5%. Market rate of return can be assumed to be 11.5%. Now, do remember there are two CAPM formulas. First one is risk-free rate plus beta factor multiplied by risk premium. And the second one is risk-free rate plus beta multiplied by market rate minus risk-free rate. Do remember that in some questions you are provided with risk premium and in some questions you are provided with the market rate. Over here in this question, which formula will we apply? In this question, which formula will we apply? We will apply the second formula. Why? Because as per the details of the question, we are provided with the market rate of return of 11.5%. This 11.5% is market rate of return. However, sometimes we are directly given with risk premium. Over here, risk premium will be 11.5 minus 4.5. What is 11.5 minus 4.5? It is 7, correct? We can use the first formula, but in that case, you will use 11.5 minus 4.5, that is 7%, if you want to use the first formula. Okay. After this, it says Cosmo company has been considering three other longer term projects where investment expenditures will be phased over 3 years. Now they are talking about three other long term projects. Okay, they are talking about three other long term projects. These are separate. So it says Cosmo company has been considering three other long-term projects where investment expenditures will be phased over 3 years. Maximum expenditure on these three products in total is 6.5 million for year number 0, 5 million for year number 1. All three projects can be scaled down but not up. And it is assumed that none of the projects can be postponed to a later year. Given the multi-period capital rationing constraint which it faces, Cosmore company is proposing to use linear programming to determine which project should be undertaken. The linear programming model has been formulated as follows. How many of you are aware about multi-period capital rationing? Are you all aware about multi-period capital rationing? Are you all aware about linear programming? Now, sometimes ACCA makes life of students slightly difficult. Linear programming is something that you did in detail. Linear programming is something that you did in detail in your PM exam paper. Do you all remember shadow price, slack variable, forming the linear programming inequalities, and then making the constraints and the graphs? Correct? Same logic and same concept will apply over here. Same logic and same concept will apply over here as well. Now, they are saying that you have to apply the multi-period capital rationing. Multi-period capital rationing means that the capital is limited, the funds are limited over more than one period. Okay, over more than one period. Which means that the limit of capital is not for 1 year only, it is for multiple years. It is for more than 1 year. Yes or no? Do you all remember it? Correct? Now, they have given you some functions. They have given you some functions in your exams. You are not supposed to solve them. In PM paper, in your PM paper, in your basic ACCA paper, you were supposed to solve them. However, over here, you are not supposed to solve them. You are just required to give interpretation of each of these elements. That's it. Okay. Yes, it is slightly more difficult. Especially, it is difficult for the students who had exemption in PM. How many of you were exempt from PM exam paper? I believe and I hope that somewhere in your life you did linear programming. Okay. Now, even if you did not do it, I hope that you will be able to at least interpret this information, okay? And that's what the question requires. Now, if we see the answer, oh sorry, the question, it says prepare a report to the board of directors of Cosmo company which evaluates the financial acceptability of the investment in ice cream manufacturing, 13 marks. Okay, you have to evaluate the financial acceptability of the project. Part 2 says calculate the percentage change in revenue required for the investment to have a zero net present value. Sensitivity analysis. Correct. This part is for sensitivity analysis. Percentage change in investment expenditure required for the investment to have a zero net present value. Sensitivity analysis. And evaluate whether the calculations in one is more sensitive to revenue or investment expenditure. 7 marks for sensitivity analysis. Okay, 7 marks for sensitivity analysis. For this, what you have to do, step number 7, important live classes tab. And the first video was about sensitivity analysis. Yes or no? Do you remember? Then it says discuss the process for and problems with incorporating project risk into the cost of capital for the investment in ice cream manufacturing and the problems with linking risk assessment to the cost figures in the investment appraisal. Then you have discussion. Discuss the limitations of using sensitivity analysis as a basis for deciding whether to invest in a project with reference to the calculations in 2. Discuss the limitations of linear programming as a basis for choosing between investment projects in a multi-period capital rationing. And then we have 10 professional marks, the newly introduced professional marks. Now, I believe if something like this comes in your exam, it will be a pain. Why? Because firstly, it is a 50 marks question. Students don't generally expect, students generally don't expect that a 50 marks question will come from linear programming, sensitivity analysis. A 50 marks question will come from a random or a remote topic that is not tested frequently. Am I correct? And if something like this comes in your paper, you will panic. Right now, since we are doing it live, things are different. But obviously, when you are doing your exam and something like this comes, it is going to be a difficult to handle task. Yes or no? How many of you agree? Because linear programming is not tested frequently, sensitivity analysis is not tested frequently. So I believe that if something like this comes in your paper, it will be a big challenge. These are not frequently tested topics. These are not frequently tested topics. And to clarify, this is from the official ACCA June 2025 mock. Okay. ACCA gives you a mock exam paper, and this is June 2025 ACCA mock exam paper. If you don't have this paper, if you don't have the relevant Excel files, you can obviously WhatsApp me on my number as mentioned, and I will provide it to you, but it is going to prove a big challenge. Okay. However, sometimes this happens, sometimes it happens that a 50 marks question is very difficult. It is so difficult that you hardly get 20 or 30 marks over here. Okay. Because as a student, if you go in the exam hall and if you find inequalities written in the exam, you will panic. You will just try to solve as much as possible. So maybe you will get 20 marks. Now you have to do good in section B. Okay. Now the thing is that This can happen with anyone. This can happen in any attempt. The first thing that you need to do is to be good at report writing. Okay, note down the elements of report writing, how a report is written, and make sure that you don't lose marks when it comes to report writing. Now I want to go review the ACC answer. I have made files for this as well. Yes, we are going to discuss this question in detail. First thing, number one, first thing, what do you notice in the report? The first thing in every report you will see is a proper bold heading. The first thing that you will see in every report is a heading. Okay, note down this, that your report will follow this format and you will have a proper heading. Okay, addressing whom the report is written to. Then you can see that there is an introduction paragraph, intro. So your report will also have an intro paragraph as is mentioned over here. Is it clear? And then you can see that ACC answers have proper headings as per the requirement. You can see all the headings over here. As per the requirement, you have proper headings. As per the requirement, you have proper headings, even referencing to the part of the heading. You can see headings, okay, proper headings, then a conclusion and report compiled by end date, and leave it blank. This is blank, this is blank. Don't write actual date or actual name. Okay. And then you will have appendix. Obviously, appendix is something that you will do in spreadsheet. Appendix is something to be done in spreadsheet. Is this clear? I am emphasizing on the importance of report format. Also do note that they don't write a very long paragraph. They write 3 or 4 sentences, break it. They write 3 or 4 sentences, break it. They write 3 or 4 sentences and break it. So you can see proper spacing as well. You can see proper spacing between paragraphs as well. You have to leave proper space. All these are going to give you some marks. You can see space over here. You can again see space over here. So don't keep writing it in long paragraphs. Put proper space between 2 paragraphs, write 2 to 3 sentences, put a proper space, then write 2 to 3 sentences, then put a proper space. Okay, yes. What is your question? Please ask. We are going to do question number 1. Is just for the theory part of the question. Yes, it is for theory and also it is linked with your appendix. If, for example, in any report there are some references to the appendix, you will give proper reference. For example, NPV was negative, so they are giving reference to appendix. Okay. Is this clear? Now let's come to the question. What I have done is that I have prepared a summary of the theory as well. Okay. Do you all have this document for June 2025 as well with you? This is a summary document. Again, you will get summary of entire mock paper, June 2025 ACCA mock paper. You just need to WhatsApp me. If you WhatsApp me, I will provide direct link to download June 2025 ACCA mock paper, question 1, question 2, question 3, summary, Excel files, answer paper by ACCA and question paper PDF as well. Okay. So all these documents are ready. All these documents are prepared for the entire June 2025 past paper. And I will really want you all to solve this obviously. Let me show it to you. This is something that I want to share with you. June 2025 ACCA official mock exam paper, June 2025 ACCA official mock exam paper answer. Then for question number one, I have made a proper Excel file. I have made a proper summary file. Likewise, for question number two, we have a proper PDF file, and we also have a proper Excel file for entire solution. And likewise for question number three, we have a proper Excel file, and this is very important. This is very important. In this file, I explained interest rate swap step by step because this is an important question. And then it's question summary file as well. So how many files you have? There are three questions. Summary file, three summary files, three Excel files, six, and two main files of question and answer. Okay. So please obtain all this data from me right after the session ends. Right now, I will explain you the answer. And yes, if you are someone who is new, please note down my contact number, which you can use plus 971 5850 68907 for sending me a WhatsApp to get these files. Okay. Those who have the Google Drive link, I will appreciate if you can go to the Google Drive, go to the past papers and relevant material tab, and download June 2025 mock exams, all the files, all 8 files. Download all 8 files. Has someone downloaded all the 8 files? Can someone please also share in our registered students group as well so that others can have it? Okay. Can someone please help me share in the registered student group all 8 files so that everyone has those files? There are 8 files, correct? And I believe that those students who have Google Drive link, they can easily find the files and they can please share it in the group as well. All the 8 files. Okay, one of the students has shared the link to the direct folder, I believe, or the Google Drive, I don't know. All right, good. Thank you. So simply go to the Google Drive, go to the past papers relevant material tab and download the file. Okay. Can I proceed now? Can I proceed? By linking the theory aspect to the spreadsheet can be put in bracket. Yes, you can. You can. You must. Okay. All right. Now, this was your questions data, and you were supposed to do the entire workings. Now, let me open the Excel file and let me show you how neat and clean your file must look like. Okay, let me share something with you. Okay, so here we go. Are you all ready? Now, do remember that your spreadsheets must be tidy. Your spreadsheets must be neat and tidy because your marks will be counted for neatness. You have to make sure that your spreadsheet is neat and tidy. You must invest proper time to make sure that whatever you do in a spreadsheet is clearly visible to the examiner. Make life of the examiner easy and he is going to pass you, he or she. Okay. So you can see what I have done. I have put data of the question at one place. Yes, this is optional. Okay, putting data is optional. Maybe in your exams you will not have sufficient time to write down all the data at one place from the question. So this is optional. Okay. However, what I have done is that I have put all the data together. You can see that all this information was given to us in the question. So I have just pasted it over here for ease. But as I said that in exams, maybe it might be difficult for you to put all the data at one place. Okay. Can you all please open this spreadsheet file with you? Now you all have the link, correct? So this is the data. This all was given to us in the question already. If you read the question, you will find all these values. All these values are given to you in the question. If you think you have a good pace, if you think that you are good uh, at writing down the data, like you don't have any problems of time is not a problem for you, put down all the data. Okay. Otherwise, if you don't have time, this is how you have to solve it. This is the solution. This is the direct solution. Okay. This is the solution. This is how you will solve your question. Again, make sure that your solution is neat and tidy. There is no mess, and make sure that whatever you do is very clear, visible, properly labeled, because all these things are for your professional marks. Okay. If in practice platform you don't have the option to put borders, just give a proper gap, proper spacing. Okay. So you can see that over here I did net present value working. You can see that over here I did proper net present value working. And whenever I did a sub working, like this is the main net present value working. But if there is some working that I did below the question, I have given proper referencing W1, W2, W2, W3, W4. Is this important? Yes, you have to do these workings. Okay. Is it clear, everyone? Is it clear, everyone? So these are the proper workings that you do. These are the proper workings that you do. And I will not repeat the net present value area because many students have already done net present value several times. Okay. We must invest more time on sensitivity analysis and linear programming. However, after reviewing the sheet, if you have problems in net present value, you can talk to me, but this is very simple. Sales revenue is your cash inflow. Costs are your outflows. Tax allowable depreciation is first subtracted. However, if we subtract it, the reason is to calculate the correct tax expense, and then we will add back the same amount later as well. So sales revenue minus cost minus tax allowable depreciation, gain on disposal is obviously added. You get pre-tax profit, you charge it with tax, and then you reverse your non-cash expenses and your non-cash incomes. Working capital comes later on because it is not something that is part of profit and loss account. Yes, it is an outflow, but it is not allowable expense. Initial investment is subtracted, disposal proceeds are added, and you finally come with net cash flow amounts. Uh, I will go with majority. Majority of you are clear with this highlighted working, correct? Do you want me to explain all the elements in the gray highlighted area one by one? or shall I skip it to save time? Because this is something that you have done several times previously as well. Yes, obviously, if there is someone who is very, very new, they need to discuss with me. But I believe that majority, like 30 to 40 or 50% or 70, 80% of students know this basic net present value, correct? Yes, it is okay. It is absolutely okay if you want to do workings first and go with the main net present value table later. That's perfectly fine. No issues in that. Okay, then discount factors, discounted cash flows, and finally we get the net present value. Now, I am not repeating this area because this is something that is done many, many billion, trillion times in the past. If you have any doubts, if you have any doubts in this area, you can discuss with me. Okay, this is done trillion times previously as well. We are judging we skip working separately and calculate on the main structure. Is that fine? Khalid, if the working is very, very minor working, do that. Otherwise, do calculations separately. Don't skip it. Okay? All right. So what I am saying is that I am skipping this point one, part one, because part one is something that we have done several times previously as well. Those students who have basic knowledge will not have any problem in this working, which is labeled as one, because they have done net present value many times previously. Yes, I have also used the cell formulas where relevant. But sometimes you have to do separate working because doing them using the cell formula is, you can say, risky. Maybe you will put a wrong formula, but if you feel that you can do everything in the main working using the cell references, go for it. However, if you think that you will make some silly mistake and you will cause more damage or harm to yourself, or you will lose the marks, or you think that the working is very complex and it needs to be done separately, do it separately. Okay? Okay. Yes, to save time, you can do it. But for example, sometimes the workings are so complex that doing them separately is better, correct? Anyways, now let's come to two. And this is your sensitivity analysis. Okay, Pari, there is no fixed format. When you see the question, you realize what area question is going in depth. We cannot say, we cannot make a fixed rule. Okay, we cannot make a fixed rule and say that we have to do X thing or Y thing or Z thing. Okay, all right. Anyways, let's come ahead. Okay, now sensitivity analysis is very important. Okay, sensitivity analysis is very important. Few days back, I shared a sheet about sensitivity analysis in our WhatsApp group as well. And someone who is doing step number 7, the very first video is about sensitivity analysis. Correct? How many of you have idea of sensitivity analysis? And sensitivity analysis is again nothing new to AFM. Sensitivity analysis is probably taught in your FM paper as well, at university level as well. What do you mean by sensitivity analysis? Anyone? What do we mean by sensitivity analysis? Change in will lead to correct. In sensitivity analysis, we check, we analyze that by what percentage certain element will change and the NPV will become zero. Correct? So there is a proper video about sensitivity analysis in the important live classes tab. Those who have watched the video, I have given proofs over there as well. Like I have solved it and then I have proved why the NPV is becoming zero. So actually sensitivity analysis tells us uh, that by what percentage something will change and make the NPV zero. Now, for example, let's talk about sensitivity analysis on initial investment. Right now, my net present value is 971.8. Right now, my net present value or NPV is 971.8. Okay. Now, for example, let's say a question tells you to perform sensitivity analysis on initial investment. Let's say someone tells you to perform sensitivity analysis on initial investment. Now, first thing, initial investment is a cash inflow or outflow? Initial investment is a cash inflow or outflow? Outflow, which means that if the initial investment will an increase in initial investment will cause NPV to decrease, correct? If initial investment increases, if initial investment increases, NPV will fall, because if cash outflows increase, they cause a decrease in NPV. In sensitivity analysis to initial investment, we have to see that by how much in terms of percentage an increase in initial investment will cause my NPV to go to zero. Okay, what percentage change or what percentage increase in initial investment, what percentage increase in initial investment will cause my NPV to go to zero? We know that initial investment and NPV have an opposite relation. An increase in initial investment causes a decrease in net present value. Now, how do we perform this sensitivity analysis? Okay, now it was not very simple over here in this question. Okay, there are various variables linked with initial investment. So it was a difficult task, it was not an easy one. Now, how did I solve it? Listen carefully. If my initial investment, this is 16,000, correct? If my initial investment increases, if my initial investment increases, what other things will change? Number one, if my initial investment increases, is it good or bad? Number one, if my initial in good or bad? Bad. Why? Because what will happen? What will happen? Cash outflows will cash outflows will increase or decrease? Cash outflows will increase. One thing. Okay. This is one element. What is the cell reference? Cell reference is L14. Correct. I know that if my initial investment increases, cash outflow will increase. This is one thing. Now, will there be any benefit of increase in initial investment? Yes or no? Think about this case. In this question, if we go back to the question, yes, tax allowable depreciation is one thing. Read this area carefully. If my initial investment increases, there is a linked impact. If my initial investment increases, If my initial investment increases, tax allowable depreciation will also increase. And if tax allowable depreciation increases, this means that taxable expenses are increasing. If these taxable expenses increase, what happens? If these taxable expenses increases, what happens? You pay less tax. Excellent. Taxes will fall. Do you all agree? So in this question, number one, I know that if my initial investment increases, although increase in initial investment is an increase in outflow, but due to this increase in outflow, my tax allowable depreciation will also increase, causing an a benefit in terms of reduced tax. So increase in initial investment will reduce tax. Okay. And also in this question, it was assumed that we can sell our initial investment at 10% of its original value. So this will also increase. Agreed? Agreed? Okay. So there are three things. Let me write it over here. There are linked things actually. This sounds to be an easy thing. If initial investment increases, what will happen? Number one, initial cash outflow will increase, which is negative. Number two, depreciation expense will increase, leading to lower taxable profit, leading to lower tax. This is positive. Number three, if initial investment increases, disposal proceeds, cash inflows will increase at the end of project as well. Are we all clear? Are we all clear? Okay. So now you don't have to think in isolation. You have to actually tell the board of directors that if the initial investment increases, what will be its impact? There will be three impacts. Okay. So although this sensitivity analysis looks very simple, but it is again a complex thing. Now we are finding out what will be the total impact. The first thing is L14. Okay. What is the sensitivity analysis formula? Do you all remember the sensitivity analysis formula? Yes or no? For example, if someone says perform sensitivity analysis on initial investment, so the formula is NPV divided by all the impacts of initial investment in present value terms. Yes or no? Are we all together? Okay. Those who have done the basic sensitivity analysis lecture, they know that we put NPV in numerator and in denominator, easy formula is present value of initial investment. But this formula NPV divided by present value of initial investment is used only when the initial investment do not impact anything else. Over here, your initial investment is giving impact to various other elements as well. Maria, it was given in the question. The amount of initial investment was given to you in the question. Now, the formula for initial investment in this question will be net present value divided by present value of all impacts that initial investment will have. Okay, and there are three types of impacts, correct? There are three types of impacts. We just did this, we just discussed in the question. First one is the increase in initial investment is itself. Second thing is that an increase in initial investment will decrease tax expense. And the third thing is that the residual value will change as well. Okay. Now, first thing is L14. I will go one by one. The first thing is L14. What is L14? L14 is initial investment. Do you all agree? L14. Any problem in this one? This is initial investment, correct? So present value of initial investment is present value of initial investment is 16,000 negative. Is this clear? This is first element. Please confirm me. First element of the initial investment is the initial investment itself. Clear? And generally, this is the only component. However, in this question, there are more components as well. Okay, now it says plus minus M29 divided by 1000 into 0.25 into sum of M17, P17 plus P8 minus P8 into 0.25 into P17. Now this is becoming complex, correct? So let's go slowly. Let's talk about M29. What is M29? What is M29? M29 is actually your annual depreciation, correct? And this is the depreciation that was being charged in the books if initial investment was 16,000. Okay, M29 divided by 1000. Divided by 1000 is just to convert everything into 1000 into 0.25. What is this 0.25? Now, if we check the question, tax rate is 25%. Okay. So what we are doing is depreciation into 25%. Now, what does depreciation into 25% means? Your depreciation is 4,000. Your depreciation is 4,000. Due to depreciation, you get a tax benefit of 25%. Okay. Your depreciation is 4 million. If you charge 4 million as a depreciation in your books, if you charge 4 million as depreciation in your books, what do you get? You get a benefit. What benefit do you get? You have to pay less tax. Yes or no? Yes or no? So this is actually depreciation into tax rate, depreciation into tax rate, depreciation into tax rate. What is depreciation into tax rate? Depreciation into tax rate. M29 over 1000 into 0.25. Is this clear, everyone? This is your tax benefit due to depreciation. This is your tax benefit due to depreciation. Yes or no? Depreciation into tax rate. Okay. We are dividing it with 1000 because although this chart was made on 1000's principle, but over here this chart, this working was not performed on 1000 principle. That's why. Okay. Just to make sure everything is in thousands. This was not in thousands, correct? Tax allowable depreciation table, this working was not in thousands. Okay. So that's why divided with it. Sum of M17 into P17. What is M17 into P17? Discount factors. And I hope you understand that although we will get a benefit of 1 million, 4 million into 25% is 1 million, but we will get this benefit at the end of first, second, third, and fourth year. So basically, if I summarize, I can say this thing is present value. This highlighted thing is present value of all the benefits you get due to depreciation. Yes or no? Your depreciation every year is 4 million. Due to the depreciation, you get a benefit of 1 million every year, and its present value is this value. Sum M17 to P17 is the sum of discount factors of year 1, 2, 3, and 4. Is it clear, everyone? If you want to do it in some, yes, 1000 taken to round it to 1000. Okay, let me explain it again. This highlighted M29 over 1000 is depreciation. M29 over 1000 is depreciation. M29 over 1000 is depreciation. Yes or no? This 0.25 gives you 1 year's tax benefit. Depreciation into tax rate gives you benefit that you will receive 1 year, in 1 year. Depreciate. This is the benefit that you will get in 1 year. Yes or no? Okay. So this is what, this is tax benefit. This is tax benefit. Will you receive this tax benefit one time only? Will you receive this tax benefit one time only? Or will you receive this tax benefit every year? I will receive it every year. For how many years? For how many years? For how many? 4 years in this question. Okay. At the end of first year, at the end of second year, at the end of third year, at the end of fourth year. At the end of first year, at the end of second year, at the end of third year, at the end of fourth year. At the end of first year, at the end of second year, at the end of third year, at the end of fourth year, every year. So this means that this is the benefit being received at the end of first year, at the end of second year, at the end of third year, at the end of fourth year for 4 years. So you need to discount it 4 times. This sum M17 to P17 reflects the discount factors of year number 1, 2, 3, and 4. Now tell me, is it clear? Why are we deducting the benefits? In what sense? This is a positive sign. This is a plus sign. I have, okay, this was negative. This was in negative. So just to make it positive, I multiplied it with a minus sign. However, since it is a benefit, it is being added. If I don't put a minus sign over here, minus and minus will not cancel each other. Correct? Okay. Okay, we can do it like this as well. Second element, tax depreciation benefit 4 million is tax depreciation. So tax benefit is 25% only, because when we subtract 4 million, our tax liability will reduce by 1 million only. This is benefit for 1 year multiplied by sum okay, you can do it like this as well. Correct? I hope I have not done anything wrong. Yes, you can use the NVT formula as well. This is M17, P17 gives you discount factor 25% into. Okay. Now this is a cost, this is a benefit. You can use the annuity formula as well. Third element. Are these two things clear? Now the third thing, what is the third thing? Third thing is that written over here, P8 minus P8 into 0.25 into P17. So let's see what is P8. Is P8 something that is linked with initial investment? P8 is 1600. P8 is 1600. Why are we using this 1600? We are using this 1600 because in this question, gain on disposal was directly linked with initial investment. So if my initial investment changes, my gain on disposal will change as well. Yes or no? In this question, it was stated, that gain on disposal and the disposal proceeds will be 10% of initial investment. In this question, it was stated that gain on disposal or the disposal proceeds both are going to be 10% of initial investment. So if I am doing sensitivity analysis to initial investment, I know that if my initial investment will change, I know that if my initial investment will change, initial investment, increase in initial investment will be an outflow. However, it will cause an increase in inflow in a later year as well. So P8 is my gain on disposal minus P8 into 0.25. Why? If gain on disposal is tax chargeable, yes or no? Gain on disposal is tax chargeable, yes or no? So P8 is gain minus P8 into 0.25% or 25%, because if I get a gain, I will have to pay tax. So if I receive 1600, 25% or 400 will be paid back to the government. Okay. So this is the leftover multiplied by P17, because this gain will arise at the end of fourth year. This is not its today's value. Today's value, if you need to calculate today's value, you need to discount it. So we can say that third thing is disposal proceeds net of tax. 1600, you can directly say 75%, because if I will make a gain of 1600, if I will make a gain of 1600, 25% will be paid in form of taxes. So I will have 75% with me, multiplied by the relevant discount factor, which is 0.61. Okay. Yes, this is very good question, Maria. Maria has a very good question. What if the gain and proceeds are different? Did you all notice that in this question, gain on disposal and proceeds from disposal were same? Excellent question, I must say. Did you all observe that in this question we were using 4 years straight line method, straight line depreciation method, which means that at the date of disposal, my asset was 100% depreciated, and therefore gain on disposal and proceeds on disposal were same. But what if in your question gain on disposal and proceeds from disposal are different? If this happens, you will calculate tax separately. Okay. Disposal, in that case, disposal proceeds will be 1600, but the tax amount will be calculated on gain. For example, let's say if gain is, let's say, 1000, so it will be 1000 into 25%. Is it clear? Yes, proceeds is cash inflow. Clear, everyone? In this question, we were using a 4 years straight line depreciation method, which means that every year depreciation was same, and in 4 years my asset was 100% depreciated, and hence whatever I received from sales proceeds was also my gain. However, it may happen that gain on disposal is different and proceeds are different. In that case, proceeds is a cash inflow, but the gain will be calculated on the actual amount of gain that you make. The tax will be calculated on the actual amount of gain. Okay, so this is the present value of all the impacts that will occur if initial investment changes. So this is the all the impacts. Now the formula is simple, which is your NPV divided by the discounted after tax investment relevant cash flows. So this comes out to be 7.913%. 7.913% means that if my initial investment increases by 7.913%, if my initial investment increases by 7.913%, my NPV will become zero. Is this clear, everyone? Is this clear, everyone? If my initial investment increases by 7.913%, if my initial investment increases by 7.913%, my NPV will become zero. Is this clear, everyone? If my initial investment increases by 7.913%, my NPV will become zero. OMI depreciation is not a cash outflow. If depreciation changes, the only cash outflow that changes is the amount of tax. Okay, let's try to do it over here. So I don't know if the sheet is linked or not. Let's say if this increases by 7.913%, so this will be 1 plus 7.913%. This is how you increase something, correct? Can you see this formula? My sensitivity analysis says that if initial investment increases by 7.913%, NPV will become zero. Yes or no? So let's say if initial investment, if I have to increase it by 7.913%, I will multiply the previous initial investment with 1 plus 7.913%. Yes or no? Are you all together? What I am doing, I am trying to prove that the sensitivity analysis that we performed is correct. So let's click it. Okay. This is the first impact. Secondly, this will also change with 1 plus 7.913%. 7.913%. Here you go. Can you see it? Is it clear, everyone? If my initial investment increases by 7.913%, if my initial investment increases by 7.913%, the first impact is that this value will change. Second thing is that since this cost will change, this will change the depreciations and the disposal proceeds as well. And everything is linked over here, so you can see the magic that NPV becomes zero. Is it clear, everyone? So hence proved, self-click on those cells again, the ones that have the breakdown of how you get the answer. Which cell? This one? I change this value. I increase this by 7.913%. This is my initial investment. This is my initial investment. I increased this initial investment with 7.913%. Due to this, depreciation will also change. So I increase this value. And since depreciation is 25% of above value and the disposal proceeds are also linked, so all the values automatically changed over here, causing NPV to become zero. This was just for your satisfaction. Okay, can we keep putting values until it's given? Huh? No, why do you want to do that? There is a proper logical method to calculate sensitive. No cells N67, N70. N67. Okay, these three cells. What happened over here? Everything is explained. Mark, what do you want to ask? Sir, how is reduction? Okay, we are going towards revenue part. It is a separate part, but let me confirm me. Is this clear? You can see that I have proved it as well. You can see that I have proved it as well. You can see that I have proved it as well. Okay. You can see that I have proved it as well that NPV is becoming zero. Now let me undo it. Control Z, Control Z. Okay. Now let's do the second part. Let's do the second part. Okay. We were also supposed to perform sensitivity analysis on sales revenue. We were also supposed to perform sensitivity analysis on sales revenue, correct? Now, again, you will see what is linked with sales revenue. Now, firstly, the purpose of sensitivity analysis is to find out by how much a variable, by in terms of percentage, by how much something may change to make the NPV zero. Now, if sales revenue increases, will NPV become zero? Or if the sales revenue decreases, a decrease in NPV, a decrease in sales revenue, a decrease, a reduction or a decrease, a reduction or a decrease in revenue, a reduction or a decrease in revenue causes NPV to be zero, correct? So now again you have to see what is linked with sales revenue. Now again you have to see what is linked with sales revenue. What do you think? If sales revenue changes, what other things may change as well? Tax, excellent. Because higher sales revenue will mean higher income. Higher income will mean more tax. Okay. And working capital. Thumbs up. Why working capital? In this question specifically, working capital is linked with sales revenue. Again, this is something that you will see sometimes, not always. Agree? Sometimes in a question, your working capital is not linked with sales revenue. Sometimes it is linked with sales revenue. Okay? So you have to be careful about this. Is this clear, everyone? Now, for example, if my sales revenue increases by 100, if my sales revenue increases by 100, if my sales revenue increases by 100, what will change? Will the tax amount change? Yes, by how much? By how much? If the tax rate is 25%, if the tax rate is 25%, I can say that if my sales revenue increases by 100, my tax will increase by 25, correct? Okay. One more thing which is very important is that you have to, if we read the question, let's go to the question. If you go to the question again, okay, it states revenue. Now, one thing is known as sensitivity to units. Sensitivity to units sold is different. Okay, listen, there is something, there is a sensitivity relevant to selling price, and then there is a sensitivity relevant to sales units. Okay, why? Why? If selling price increases, if selling price increases, if selling price increases, there will be no impact on, there will be no impact on variable cost. Excellent, excellent. If selling price increases, variable cost will not change. But if units change, if for example units produced and sold changes, it will cause a change on sales revenue as well as variable cost. Excellent. So you have to be very careful. Now let's review this question. So it says M5 into M17, N5 into N17, O5 into O17, P5 into P17 multiplied by 1 minus C37. Okay. M5 into M17. What is M5 and what is M17? M5 into M17. Basically, sales revenue multiplied by the discount factor. Sales revenue multiplied by the discount factor. Now, what is happening? Sales revenue multiplied by the discount factor gives you the present value of year one sales. Sales revenue multiplied by discount factor, sales revenue multiplied by discount factor, sales revenue multiplied by discount factor gives you the present value. And 1 minus C37, why is this 1 minus C37? 1 minus C37, 1 minus C37. C37 is your tax rate, so you are netting it using the tax. We have to discuss and we have to check about working capital as well. Let's put it on a hold for a while. But apart from that, is it clear? Okay. So where is working? Yes, I said that let's check about working capital as well. But apart from that, is it clear? Okay, let's see why working capital is not included over here. But apart from that, is everything else clear? Sir, why takes multiplied by? Okay, because if sales revenue changes, the tax will also change, correct? For example, if I am earning 100, will I get 100? If tax rate is 25%, if tax rate is 25%, I will get 100 into 1 minus 25%. Yes or no? Okay. So let's discuss about working capital. But before that, the answer is coming 2.05. So let's do one thing. Okay. If we ignore working capital for a moment, just ignore working capital, what does this show? This shows that a reduction in revenue of 2.05% will cause NPV to become zero. Yes or no? Okay. So let's see 1 minus 2.05%. Okay, this is 15.7 something. All right. Let me check the ACCA answer as well. Okay, so here we go. 924,000 divided by 47245. Okay, this is probably 1 minute. Let's see again. First value is 14.3 million into 0.885. Okay. Now, what is happening over here? This 15.7 is probably due to rounding off. Okay. Let me try one more thing. Let me link it directly. I don't know if all the values are linked together or not. Oh. Wait a second. Wait a second. Let me erase it. This, 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 this. My answer is 2.05. Actually, it is linked with the above value, so it is also changing the above values. This is changing things as well. Wait a second. The difference is due to rounding off only. The difference is due to rounding off only. This is 2.0519. 1 minus 2.0519% multiplied by 1 minus 2.0519% multiplied by 1 minus 2.0519% multiplied by 1 minus 2.0519%. Okay. Now, over here, what is happening actually is that your working capital, we have not taken into account working capital, but working capital is linked with sales revenue. Okay, working capital is linked with sales revenue. So when we are changing these values, this is linked over here as well. I will make a revised working for this part and share with you. However, this is just a rounding off problem only. Okay, is this clear? Is this clear, everyone? I will make a revised, clearer working in which things are more linked so that you can come up with exact zero. Right now, since the below formulas are linked as well, so it is not heading to exact zero. Now it is you don't need to prove these workings. You don't need to prove sensitivity analysis, so don't worry about it. You don't need to prove sensitivity analysis. You just need to perform it. Okay, you just need to perform the sensitivity analysis. That's it. You don't need to actually do the prove thing. You don't need to prove it. Okay, in sales revenue, what we did is that every year we have a sales revenue, we took its present value, all right, and then multiplied it with 1 minus tax rate as well. Why 1 minus tax rate? Because if the sales revenue changes, tax also changes, correct? If the sales revenue changes, tax also changes. Okay. Okay. All right. So now this was one new part for everyone. Sensitivity analysis area. Another new thing in this question was the linear programming part, but in your exam, you will be required to explain these variables. In your exams, NPV divided by, here you go, net present value divided by the discounted after tax sales revenue values. Net present value divided by after tax sales revenue values. Okay. Now let's come to linear programming. Okay. In your exams, you will be required to interpret or explain linear programming. So what's the difference from this question and a basic scenario question where we don't? Uh, we always consider all the impacts. This specific question was difficult in terms of sensitivity analysis, but we always consider all the impacts. Okay, now in your exams, you will not be required to solve the linear programming as you were required to solve in performance management exam, but you will be required to interpret the elements. That's it. Okay, let's go to the question and let's see what is mentioned about linear programming. You can see that there is no solution about linear programming. Only thing that you have to do is to do some interpretation, and for that we need to understand what the linear programming model is about. Now I will briefly explain linear programming. We have one more question, sir. I have a question for the first part. Why did we know did not have tax loss but tax gain in first year? Tax loss or tax gain? Year number one, we have. Are you talking about this 38? Are you talking about this 38? Okay. Student has a question that why have we not carried forward this tax loss to the next year? Rather than we have taken it positively. Is this your question? Okay, for that I made one file. There are two possible treatments of tax losses. Have you read that file? Are you someone who is enrolled for the paid batch? Are you enrolled for the course? Okay. I have broadcasted a tax losses file few days back. Have you read that file? This type of treatment can be found in Zishi company as well. There are two things. Number one, losses of a project are carried forward to the next year. For example, if in the first year there is a loss of 150, in the second year company will not pay tax on 1257. Rather than they will reduce this 1257 by 150 and then pay the tax. Correct? Second scenario is when you take second scenario is when you have a tax loss, you take a positive amount for it. What is the reason? Anyone who has done that file? Do you all know that there are two possible treatments of tax losses? First treatment is to carry it forward to the next year. The second treatment is that if you have a tax loss, you take it as a positive tax cash inflow. How many of you are aware of these two techniques? These two alternative uh, treatments of tax losses. How many of you are aware of it? Okay. When do we take it as a positive or a cash inflow? Can someone who has the relevant knowledge confirm me when do we take it as a positive cash inflow? Anyone? No. If cash flow is not mentioned, no. If the company has other projects where the tax losses can be adjusted, read over here. Tax is payable, tax is payable at 25% for both companies in the year in which profits are made. Any tax losses can be assumed to be set off against other profits made by the company in the year losses are incurred. Okay. Sometimes we carry forward tax loss, sometimes we don't carry forward tax loss. The main reason is this reason, this paragraph, this statement, and I have made a document about this as well. If the company has some other project, if the company is doing multiple businesses, company can use the losses of this project to reduce taxable income of some other project and pay less tax over there. This is the key paragraph. Okay, those who don't have that tax losses file, ask me for the file, I will provide. This is the reason any tax losses can be assumed to be set off against other profits made by the company in the year the losses are incurred. So this actually means that for the losses, the company used those losses to set off the taxable income of some other project, reduced its liability for some other project, and hence they received a benefit in the same year in terms of reduced tax expense on some other project. Okay, a proper file, a proper Excel file is made for this one, so do read that file. No, you need to read that document, you need to read that document, it is important treatment. Okay, all right, now how do we interpret this? Now, this is known as objective function. Okay. What is this called? This is called objective function. How many of you are aware about objective function? Maximize 786P1 plus 692P2 plus 585P3 means that you have to maximize the net present value of the entire company. Okay. There were three projects under consideration in this question. There were three projects under consideration in this question, P1, P2, and P3. So this is NPV function known as objective function. It is calculated as NPV of project A into variable number 1 plus NPV of project 2 into variable number 2 plus NPV of project 3 into variable representing project number 3. Now, for example, if company undertakes entire P1, so this will be P1. If company undertakes entire P2, this will be 2. If company undertakes entire P3, this will be 1. Do you all remember this? This is your objective function. Is this clear? Do you remember objective function? Yes or no, students who are online? Okay, let me explain it again. In your in your question, P1 represents project 1. Okay. P1 represents project 1. Okay. P2 represents project 2 or the proportion of project 2. And P3 represents project 3 or the proportion of project 3. Let me probably open. Okay, let me do it over here. Company's net present value will be net present value of project A multiplied by proportion or percentage of A plus NPV of project B multiplied by proportion or percentage of project B that I undertake plus NPV of project C multiplied by proportion of project C that I will undertake. Okay, there were three projects over here, correct? There were three projects over here, correct? Now let's assume company performs 100% project A, like company has sufficient funds to go for 100% of project A. Let's assume that company has funds to undertake 100% of project B And let's say company has 100% funds to undertake project C. Let's assume there is no capital rationing. Let's assume there is no limit on the amount of capital. What will happen? This will be 1, this will be 1, and this will be 1. Yes or no? And what will be the total NPV of the company? It will be 786 plus 692 plus 585. Correct? Okay. If we assume that company has unlimited funds available, then company will undertake entire P1, entire P2, entire P3. So the total NPV of the company will be 786 plus 692 plus 585. Yes or no? Agreed? Okay. This is known as objective function. This is known as objective function. The purpose or objective of the company is to maximize net present value. Now, for example, let's say company has sufficient funds to undertake project P1. Company has company will undertake, let's say, 50% of P2. Company will undertake 50% of P2, and company will, let's say, undertake 50% of P3. The total net present value of the company will be how much? If this is the case, let's say if the company undertakes 100% P1, if company undertakes 50% of project P2, and if company undertakes 50% of project P3, in that case, company's net present value will be 786 into 1 plus 692 into 0.5 plus 585 into 0.5, that is 1424.5. Yes or no? Okay. This is known as objective function. The purpose of the company over here is to reach the maximum value of this objective function. Now, this objective function is defined, this objective function is controlled by certain constraints, by certain limits, by certain boundaries. What are those boundaries? If you read the question, in the question it was stated, let me clear the screen a bit. If you read the question, you can see one thing. All three projects can be scaled down. What does this mean? But not up. All three projects can be scaled down, but not up. This means that you can undertake entire project, or you can undertake 30%, 20%, 60% of that project. Correct? You can, for example, undertake half of the project, but it is not possible to perform one project two times. You cannot scale up, you can scale down. All three projects can be scaled down. All three projects can be scaled down, but not up. This means that, for example, if P1 is some project, ideally I can undertake 100% of that project. I can undertake 90% of that project. I can undertake 70% of that project, but I cannot perform this project two times. I cannot undertake 200% of this project. I cannot undertake 120% of this project. Is it clear? In this scenario, we can scale down, but we cannot scale up, which means that if let's say if I want to drink a glass of water, let's say my stomach is full, I can drink 100% of this glass, or 30 or 50 or 40 or 60% of this glass if I want. But I feel I cannot drink two glasses of water. Okay. So there is a limit at 100%. Is this clear? Is this clear? Everyone, please confirm me. Now read these constraints. Now read this. What is this? Where P1 and P2 and P3 greater than or is equals to 0 and less than or is equals to 1. This means that, for example, if this is a glass of water, at maximum, I will drink entire glass. Okay? At maximum, I will drink entire glass. So the maximum boundary is less than or is equals to 1. And at minimum, I will drink nothing, which is 0. Okay? So these are constraints. These are limits of P1, P2, P3. The values of P1, P2, P3 that we will put over here will range from 0 to 1. It cannot be 1.2, it cannot be 2, it can also not be in negative, because either I will undertake a project or I will not undertake that project. Is it clear? Then we have constraints for year 0 and year 1. Now these are for any mentioned condition. For example, over here, it was stated that in the first year, how much funds do you have in the first year? What are the available funds in the first year? Tell me. What is the available funds for us in the first year? Tell me in the question. Yes. Can I spend more than this? Can I spend more than this? No. But can I spend less than this? Yes. I can use less than what I have, but I cannot use more than what I have. Correct? So these constraints will basically explain you that how will the funds be used? How will the funds be used? You can say that this is actually explaining you the total amount of funds. Okay, what will we do? Total funds that we have for year 1, total funds that we can invest, total funds that we can invest in year 1, sorry, year 0 is 6.5 million. Total funds available to us, or total funds available for usage, or total funds that we can use can be less than or is equals to 6.5 million. This is our maximum boundary. We can use less than this, but we cannot use more than this. Now, how will these funds be used? Let's say in year number 0, my P1, my first project needs 3,000 initial investment. So these funds will be invested on P1, P2, and P3. But the total amount of investment on P1, P2, P3, the total amount of investment on P1, P2, P3, the total amount of investment in P1, P2, P3 cannot be more than 6.5 million. It must be less than or is equals to 6.5 million. The total amount that I will invest on P1, on P2, and on P3 will be less than 6.5 million. 6.5 million is given to you in the question. Here you go. Okay. The question stated that the maximum amount that you can invest on these 3 projects is going to be 6.5 million. So the total investment that I will do on P1, P2 and P3 cannot be more than 6.5 million. It will be either equal or less than 6.5 million. Yes or no? Now let's say the first project needs 3,000 multiplied by the proportion of P1 that I will undertake, plus the second project needs 2,800 multiplied by the proportion of P2 that I will undertake, plus the third project needs 2,500 multiplied by the proportion of the third project that I will undertake must be less than or is equals to 6.5. Yes, these three values were not given to you. These are assumed, these are given over here only. We are in the question, we are not in the answer. It says given the following constraints. I was just explaining. This is question, this is not answer. Even these constraints are given, you just need to explain these constraints. Year zero constraint shows that whatever we invest on P1, P2, P3 cannot be more than 6,500. Now, for anyone who has not done PM paper, I know that it is a difficult task because in PM we take around 10 to 15 hours to explain all the constraints and we also solve them. In your AFM exams, very less chances that this will come, but if it comes in your exam, they will just want you to interpret. Okay? Is it okay, everyone? Now, what I want you to do is to review this entire answer once again. Obviously, you need to review, you need to recheck, you need to reread, you need to redo. And once you reassess, redo, recheck, and some parts we have not solved, once you solve all those parts, you will feel much better. So solve this question once again. For the second question is very simple, and the third question we have a video solution available. I will share the link if you want video solution of the third question. We will not take them entirely. How much proportion we will undertake will depend upon solving these inequalities, but solving these inequalities is not in your syllabus. What proportion of each project we will undertake is not given to us. What proportion or what percentage of each project we will undertake can be obtained by solving these inequalities using linear programming model, but that linear programming model is not in your syllabus. When we solve all these inequalities using linear programming model, we get exact answers. For example, you will get, let's say, for example, P1.8. Randomly, I'm writing P2.7 and P3.6. Any answer can come up. Okay. But solving them is not in your course. You need a graph paper or you need to sketch a diagram and then solve it. That's not part of your course. You just need to interpret the inequalities. That's it. But once using these inequalities, if the question is solved properly, completely, you get exact answers of how much P1, P2, and P3 you can undertake. Yes, it is. You can inbox me. All right. So this was your first question. It was not an easy one. It was a difficult question. And I now request you all to please do WhatsApp me because there is some content that I have to share with you if you are not an already enrolled student. There are some previous very good webinars that you need to watch. You need to complete those webinars. Also do this question once again. And as far as question number 2 and 3 are concerned, we also have files for question number 2 and 3 available. Video for question 3 is available as well. So anyone who is done with all the 7 steps that I recommend on the paid course, you can actually do this entire paper and then discuss your problems with me. Okay. All right. So thank you everyone. Please continue from where you left and I am always available on WhatsApp. So you have to talk to me. You have to discuss your problems with me on WhatsApp. Yes, you can inbox me, Jaya. I will share. Thank you. Bye.